All right, good morning, folks. Going to jump right into this. Got a lot of positions I want to go through and go through these good setups that are current in our market here lately. So, I'm going to dive right in. All right, for those who just joined us for the first time, it's Tim Davis from the Bullish Bears team, and this is a market review that I like to do on a weekly basis, and also go through each and every position that I'm holding, along with the chart analysis for those positions and any chart analysis that you guys would like to see me do. All right, but before we get started, this is my full disclaimer. I am not a financial advisor. I'm not a stock guru. I don't have a crystal balls, so I cannot predict the future. No one can. They only offer possibilities or probabilities. No one is perfect, therefore, no one is 100% correct 100% of the time. I am a longer term momentum trader looking for a possible momentum buildup in one direction or the other, coupled with unusual option activity and a good chart setup. Remember, the trend is your friend. Good morning. Take a little from everyone and develop a method that works for you. I'm always looking to limit my risk, so don't bet it all on what you cannot or don't want to risk. And remember, this is trading, not investing. Should seek a financial advisor or investment firm for investing advice. With that said, let's dive right into some market action because on this past week, it was another good week. November has turned out to be a pretty good month for the bulls. I'm going to highlight a couple things about this chart analysis. So kicking it off by taking a look at our Dow Jones weekly chart. Dow has seen a new high on this past week. So got back above 30,000 for the first time since been in existence. Did not close above 30,000 this past week, but we did breach it. So that's a good sign for the bulls. Could see a lot more upside over the next 6 months to a year or so. So we'll see how that pans out. But right now, markets are still trending higher. Looking at our daily chart, so we've been trending higher, trading above major moving averages, and ever since we breached that 30,000 level, the market has started to do some sideways action. So I would not be surprised over the next week or two see some sideways trading action, especially since we finally broke above that 30,000 level on the Dow Jones. So sideways action to some pullback, I would not be surprised in the near future. But the overall market in general, longer term, it wants to go higher. So after consolidations and pullbacks to uh, certain moving averages, I would expect that the market will use those as areas of support to continue its move higher. Let's take a look at our S&P. S&P, same scenario. Nice move higher on this past week. It looks like there's still more room to run over the next 6 months or so. I believe that this bull market is in full effect. Here's our daily chart, trading just above major moving averages, and definitely looks like this bull market is in full effect. Nice runs over the past month, should I say. So I would not be surprised to see some type of consolidation or pullback here in the beginning of December as we approach December. S&P. And NASDAQ, same type of scenario. Weekly chart shows a nice movement last week. I think out of all the major moving averages, I think that the NASDAQ has some catching up to do. So we could see better movement in the NASDAQ over the next week or so than the other two. Now, let's take a look at gold, because gold has been in a correction phase. Does not mean that the bull run in gold is done. Just that in every bull market, there are correction phases, and hence I think gold is in one of those correction phases now within the bull market. So right now, looking at this weekly chart, it's like gold is trying to make a stance right here, this 50-day moving average. If that fails, you could definitely see gold possibly head towards 1700. And if it hits 1700, that would be close to a 50% Fibonacci retracement level, which normally in a bull market, after you hit retrace 50% of that move, it normally tends to find some type of footing for a strong move higher. So we'll see how it pans out over the next couple of weeks. Let's see if we can hold that 50-day moving average, or if we continue down to the 50% Fibonacci retracement level. We'll watch that level carefully. Another market I want to look at, because it's been on a rip. For those who watch Bitcoin, it has been on a tear. So it too has found some new footing within a bull run. So for quite some time, Bitcoin has been trading in this range after a big move lower back from that 20,000 level that it hit back in 2017. As you can see over here on the left of my screen, traded down, and now back. It was trading around its 200-day moving average from 2019 all the way up until we got to this point here. Then the market shot higher. So that is a sign of a possible new bull run. And again, in every bull runs, there's always pullbacks. So right now, last week, we started to pull back in Bitcoin. So some of the possibilities here, same thing. It could pull back to major moving averages and even to the 50% Fibonacci retracement level, which would take it down below 14,000. So it's sad it pans out over the next couple of weeks. But right now, it looks like we're in a consolidation phase and some pullback in Bitcoin. We'll see how that pans out. Now, big move above 20,000. The bull run will continue, but I think we could probably see more consolidation here instead of just a complete thrust above that 20,000 right away. So definitely in a new bull market for Bitcoin, but in some type of consolidation phase and pullback right now. One last one I'll take a look at before I dive into these positions, because there's a lot of positions I want to get through. Crude oil has been trying to make a stance, which is kind of shocking, because a lot of analysts would believe in the crude will start to get a pullback around here somewhere. Now, looking at the weekly chart of crude has strong resistance right around that $50 level. So if we continue higher, a strong resistance at the $50 level, which is the 200-day moving average on the weekly, could be a huge barrier to break through for crude oil if we get that far. All right. So that's our major markets. Now, I want to point out a couple positions, two in general, that was recently closed in our portfolio this past week, that show huge potential and granted some huge returns for those who follow me with these couple trades. Pointed out this new moving riot right around when it was just around the major moving average of the 50-day moving average. And since then, this thing has really catapulted higher. The position that was put on was a 5-strike call option, um, right around the 340 level, somewhere around here. Hence, when this thing took off, which is what you really want to see when you try to find stocks at good support levels that's been holding for a while. If you can get in prior to that launch off of that support level, it could be a very, very good profitable um, position, which this one was. At the closing this position, it was closed for almost 200% profit, I think. Even 200, 300. One of them was 300. And another good one this week, fuel cell. And I think this one has a lot more room to run. However, when you have profits on options, it's good to lock those profits in and re-enter the position. Have not re-entered fuel cell yet, but there's a huge possibility that I will be re-entering this one very soon, probably a lot sooner than Riot. Reason being, looking at this weekly chart, there's a lot of space between where price action is now and the 200-day moving average. So if we get any type of pullback on this next week or so, I'm definitely looking at taking another position in an attempt to ride this thing up to this 200-day moving average over the next couple months. That's just a recap of 2 positions that turned out extremely well last week. Now let's dig into current positions that I'm still holding. And I'll go through each one of these one at a time and let you know where we are in the current status of that position. So ACM still holding a vertical call debit spread. This doesn't expire until March the 19th. Into this trade on November the 19th, buying the 55 strike calls, selling the 60 strike calls against it, paying 125 for the spread. Maximum profit potential is 375. So first target goal is definitely see a push above 55. So where is ACM right now? Still in a nice uptrend. Take a look at the weekly chart. Still in a nice uptrend. And finally making an attempt to break above this area of resistance here where we have reached before. It's right around 51 bucks. So we're above that level. So looking for continuation in this particular run. And this position is already profitable, believe it or not, even though we're not at 55 yet, but we're already in the money because got in this quite some time ago. And as long as your stock price continues to move, your option can become profitable prior to it reaching its first strike. So this one is already profitable, but not yet in the money. ACM. SPCE, another one that has formed a strong base for a launching pad for a uptrend to start to continue or to produce itself, and it uptrend is definitely intact now. So this is vertical call debit spread that it doesn't expire to April 16, 2021. Into this trade on November the 19th, buying a 24 strike call, selling the 30s against it, paying 165 for that spread. Maximum profit potential of 435. I'm taking a look at space now. This one's already well in the money, so it's already well above that first strike of 24 bucks. So for those who would like to take profits, this is a good place to take profits. However, looking at the weekly chart, knowing that I have several months left, almost 5 or 6 months left, I'm gonna let this one ride for probably a couple more weeks, maybe a couple more months, or until I break above that $30 price level in a big way. So If I get above that $30 price level before the end of this year, probably be closing this one out. If not, I'll definitely hold till we can get above that price level. But this one is in a strong uptrend, and it looks like it's just getting started. So that's SPCE, and it's already profitable, well in the money. So a good place to lock in some profits if those who are fearful and don't understand technicals that well. But I'll be in this one for a while. Let your winners run when you got winners and you got a lot of time left to expiration. Let the winners run. VRT, Board of Vertical Call Debit Spread, expiring March the 19th, 2021. Entered this trade on September the 4th, 2020. Buying the 30 strike calls and selling 35s against it, paying 130 for the contract. Maximum profit potential 370. Where's Vert now? So this one is still taking a while to get that bounce from support. Still hovering around the support level of the 200-day moving average. It's been hovering there for quite some time. So as long as this continues to hover here and doesn't have a big break below that 200-day moving average, I'll stay in this position and still got several months left. So looking for a big bounce away from this 200-day moving average on the weekly chart. So as long as it's continue to hold support there, still a possible chance for a nice big bounce and a big move to the upside over the next couple months or so. So that is Vert. Fastly, FSLY, Board of Vertical Call Debit Spread on Fastly doesn't expire until January 15th. Into this trade on November the 13th, buying the 80s right call, selling the 90s against it. Paying $316 for the spread, maximum profit potential $684 per contract. First chart goes, see if Fastly can reach $90 before expiration. Let's see where Fastly is now. FSLY, well above $80 a share, so well in the money now. So almost halfway to that long strike. And looking at the weekly chart, this thing has barely got above its 90 EMA. So nice bounce off of 50-day EMA. Price action still heading higher. Looking at the TTM squeeze, it still shows that it's still making an attempt to come out of oversold territory. So that's a good setup for a big move higher or continuation higher over this next month or so. So this one could be extremely profitable. Already profitable now, almost by 100%. By the time this one closes out, this could be an extremely profitable trade where I can possibly get the entire maximum profit in this one between now and January, and that could be 300 or 400% return. So we'll see how that pans out. I already had our first 300% return last week. Let's take a look at the next one here, BABA. So BABA, for the vertical call debit spread expiring January the 15th, 2021. Into this trade on November the 20th. Buying the 275 strike calls, selling 280s against it, paying 195 for the spread. Maximum profit potential here, 305. So where's BABA now? Also in the money, another in the money position, which is what you want to see especially when you got a lot of time left, because you can continue to let the winners run. While you're in the money, you're playing with house money. It's already profitable. Let it run. So what I'm looking for is BABA to find some type of support around here somewhere. So it's been hovering right above its 50-day moving average on the weekly chart. And looking at our daily chart is what I'm really been focusing on lately. Because it traded down to the 200-day moving average, got a nice bounce since then. Now, right back up to its 50-day moving average. A big push above this level could really send BABA higher, and I mean a lot higher. So this one could reach its long strike well before January, which would make this also an extremely profitable trade. That's Baba. General Electric. I am still a long-term bull on General Electric and Ford. These things I think are in brand new bull markets because they have both been beaten down over the years. So I got longer-term positions on these and probably be holding these for the bulk of this particular term. So with GE, end up buying vertical call debit spreads. They don't expire until June 18th, 2021. Into this trade on October the 28th, 2020, buying 8 strike calls and selling them 12 strike calls against it, paying $90 for the spread. Maximum profit potential, $310 a contract. First target goal to see GE can reach $12 by expiration. Now, this one is also well in the money with a lot more time to go. So well above $8 at 1040 now. And look at the weekly chart. This thing looks beautiful for the bulls. So still approaching that 200-day moving average on the weekly, which is where I want to first get to before I even think about taking profits away from this, which is why I have many more months left and probably be in this for quite some time, unless we hit that 12 strike. Well before spring, we're looking to close this out and take profits. But right now, it's already profitable, probably about 100% profit already. So that is GE. All right. Momo got a vertical call debit spread in Momo. Also doesn't expire until January the 15th, 2021. Into this trade on November the 13th, 2020, buying a 16 strike call, selling a 21-16 strike calls, paying $113 for the spread. Maximum profit potential 387. First target goal, see if Momo can reach 21. Momo right now. Still has some work to do. And right now, Momo is still trading below major moving averages on the weekly and daily charts. So looking for Momo to get a bounce away from this support level. It's been hovering around this between 13 and 15 buck level for quite some time. And it does have earnings coming. So maybe earnings will be a catalyst to push this thing above, well above 15 bucks in a big way. So plenty of time for this one to play out. So we'll see how this pans out over the next couple of weeks or so. And so right now, still hovering around the support level. It's been hovering around the support level for a while. So hopefully the support level will be a launching pad in the near future. That's Momo. RTX, still holding the vertical call debit spread on RTX. Doesn't expire to June 18th, 2021. Into this trade on November the 10th, buying the 70 strike calls and selling the 85 strike calls against it, paying $341 per contract. Maximum profit potential, $1,159 per contract. First target goal is to see the stock price reach $80 prior to expiration. So where is RTX right now? This is also another one that's well in the money, already above 70 bucks. So this one is well in the money with a lot of time to expiration. So I'm looking for maximum profit on this one, being so it doesn't expire until June. So this one already up probably about 100% profit plus, but just breaching is 50-day moving average on the weekly. So this one is another one that's setting up to be extremely profitable between now and June. Could see 300-400% return on that one as well. So we'll see that pans out. That is RTX, Raytheon. So still an uptrend, profitable now, but there looks like there's a lot more profit on the horizon. So we'll continue to hold that position. DraftKings, I bought a vertical call debit spread on DraftKings expiring May the 21st, 2021. This trade on November the 17th. Buying the 50 strike calls, selling the 60 strike calls against it, paying $283 for the contract. Maximum profit potential 717 a contract. First target goal, see if DraftKings can reach 60 bucks. This is another one that's well in the money. It's in the money already. Or should I say it's profitable already? I think yep, in the money too, because it's above 50 bucks. And looking at our weekly chart on DraftKings, this thing is just getting started, folks. Nice bounce from the 50-day moving average. Hovered around it 9-day moving average for a minute, and now we're well above it and closed above it on Friday. So I'm expecting this $60 level to be reached well before January. So this one, looking for a possible chance to collect the full maximum profit potential on this one as well. That is DraftKings. Micron, MU, vertical call debit spread on Micron doesn't expire to January 15th. Into this trade on November the 5th, buying the 55 strike calls and selling the 60 strike calls against it, paying 175 for the spread. Maximum profit potential 321 per contract. So let's see where Micron is now. And let's see. So this one, I think, let me double check that. I think I have a different strike than what I just announced. Let me check my portfolio real quick, just to be sure. So Micron, yeah, yes it is. I have a 60-65 spread. So this one is also well on the money. I don't think I'm gonna let this run a little while longer. See if we can reach 65. So reach 65, I get a chance to take full profit on that one as well. So that is Micron. Okay, PayPal. It's one that I just saw some crazy unusual option activity on this past week and a couple of analyst upgrades. So I jumped into this one. Ended up buying a vertical debit spread. Doesn't expire to January 15th, 2021 into this trade on November the 24th. Buying the 210 strike calls, selling the 220 strike calls against it, paying $365 for contract. Maximum profit potential $635 per contract. First target goal is to see if PayPal can reach 220 before January gets here. So where's PayPal now? It too is already in the money, well above the 210 strike. But I think there's a lot more room to run for PayPal. So this one is in the money. You can easily take profits and run, but this is another scenario. Let your winners run, especially when you have a setup like this on the weekly. It's like we're in a consolidation phase, consolidating below this 213 level. Yep, solid below 213. Got to push above it, pull back just below it. But with the nice green candle on last week, parabolic SAR, when you have a white dot underneath price action, that's normally a sign of a new trend that's beginning. TTM squeeze shows a new squeeze that's happening. Well, should I say not a new squeeze, but it's like a new trend that's being formed. And you can tell by looking at the light blue bar that's starting to form and the dark red dots showing a squeeze, sort of like Bollinger Bands. Full stochastics, nice bullish crossover in the full stochastics. So this one is in a new uptrend, and it's been in this tight range. It's been in this range since July. It's like we are about to break out of this range. So that'd be a very, very good move on PayPal. We continue to break out of that range. So that's PayPal. All right, Snap also shows some extreme unusual option activity on this past week. So I got into this one as well. Bought a vertical debit spread expiring This one expires Friday. So I told you guys who were following me on Friday, there was a lot of buying, a lot of call buying for the December 4th expirations, and it was too good to pass up. Now, with that said, this one expires November the 4th. Enter this trade on, I'm sorry, it expires December the 4th. Enter this trade on November the 27th, which was yesterday. Buying a 46 strike calls and selling the 51s against it. Paying 103 for the spread. Maximum profit potential is 397. Now, when something with such a little time to expiration, time decay is what is going to work against you. Hence, when you enter a trade like this, you want to make sure that there's a possible chance for a quick move to the upside. And looking at the options market and the current technical setup, looks like it could get a thrust higher. So looking at this daily chart, there was a big move and snap back around October the 19th. Got to move up, big jump, the gap up. And then what happened, it started to consolidate for about a month. But look what it did. It consolidated just above the 50-day, which is this blue line, but travel right above this 34 EMA that I have here. This is 34 EMA. That's my 20. That's my 20 EMA. So I have a 20 EMA that has decided to ride. And since it's been riding this 20, bounced above its 9, I found support there. There's a huge chance that this thing could be setting up for a quick move to $50 a share. Hence why there's probably some bettors betting on a quick move to the upside. Taking a look at those December contracts. So looking at the 48 strike calls and the 51 strike calls, 25,000 contracts traded versus 900 open interest on the 25 on the 51 strike calls. That's extremely bullish. So you have the volume outweighing open interest by a huge amount, and I mean a really huge amount. That's normally a big time bullish signal that somebody's picking a big bet. That's going to be a quick move in this particular position. 48 strikes, they traded those the same way. So I just I did a spread because you limit your risk, especially with time decay that fights against you in such a short amount of time. So normally I would just put on a spread versus buying an outright call. With that, I'm a little time left. Looking at the take a look at this 4-hour chart. So same type scenario, been resting above major moving averages, using it as an area of support. So if this thing gets a big pop on Monday or Tuesday, I would definitely be looking to close this trade out and take profits. So that is a very, very short-term expiration. So that's one you got to really watch carefully. All right, Baidu. Vertical call debit spread on Baidu doesn't expire until January the 15th. Into this trade on November the 27th. Buying a 140 strike call, selling the 160s against it, paying $530 for the contract. Maximum profit potential $1,470 per contract. First target goals here, Baidu can reach 155 before January the 15th. And Baidu also had a very good setup. So a couple things going for Baidu right now. Looking at the daily chart, Baidu was in extreme oversold territory. Looking at the full stochastics, we dipped down to oversold territory. Williams percentage was definitely in oversold territory. CCI was in oversold territory. TTM squeeze shows oversold territory with momentum to the downside, phasing out. And a good sign of that is when you hit this 50-day moving average on a daily. Found support there and had two strong days to the upside, two big green candles. That's a sign of a possible reversal to the upside. And taking a look at the options market, there was a lot of contracts traded for the expiration that expired on December 4th at the 140 strike. You got the volume outweighing the options. Open interest at the 140 strike. Also, the volume outweighing open interest at the 145 strikes. And these are the ones that expire next week. But for this one, I wanted to give myself some time just in case it needs more time. Then you look at the January contracts. This is where most of the action was concentrated. So looking at the 150 strike calls, almost 8,400 contracts traded versus 7,400 open interest. That is unusual option activity. At the 155 strikes, 9,200 contracts traded versus 2,000. That is extreme. Volume much higher than open interest there. And also, again, at the 160 strike. So there was a lot of contracts being traded for January. So I wanted to follow that action as well. And again, daily chart has the perfect setup for a big move and continuation to the upside. So what generally happens? So probably when price action traded up to this 200-day moving average on the weekly, got rejected, but found support right around this 9 EMA. That's when a buyer started flooding in. So there's an expectation that this 200-day on the weekly is going to be taken out to the upside. So I would definitely give myself time for that to happen. And if it does, this one will be extremely profitable, folks. All right, STM, vertical debit spread on STM. This one that inspired to January the 15th into this trade on November 27th, buying the 40 strike calls, selling the 45s against it, paying 150 for the contract, maximum profit potential is 350. STM, also another one that shows some huge unusual option activity here recently. So this one, there was a lot of action around the 45 strike contracts that expire in January. 4,300 contracts traded versus 414 open interest. That is huge, unusual option activity. I ended up following, but I follow with the spread. When something's when they buy me out of the money positions like that, I try to find a position that's closer to the money and spread it if there's a lot of time to that particular expiration. It just limits the risk and also makes it profitable a lot sooner. Taking a look at the weekly chart of STEM, and a nice uptrend continuation pretty much. And it's been in this uptrend since March and has not looked back. And looks like it wants to continue in an uptrend. So I'll ride along with it. STM. All right, CX bought 4.5 or 450 strike call options. Don't expire to January, and I also bought the 450 strike call options that don't expire until April. These trades enter back on October the 30th. I'm paying $49, around $50 for the contract for each. Looking for price action to reach hopefully $5 by January and $6 by April. Both of these are profitable already. So these are two more that I could take profits on as we speak. But looking at the weekly chart again, what I'm looking for and hoping for prior to January or prior to April, starting to see some consolidation here. We may see some pullback here since we are approaching and touching the 200-day moving average on the weekly. So what I'm hoping for is a possible pullback here before the next move higher. So I'll get at a couple months. I think in a couple months we could definitely probably be above that 200-day moving average on the weekly chart of CX. Eli, still holding this Eli position. Bought the 22 strike calls expiring February the 21st into this trade on October the 27th, paying $230 for the contract. First target goal is see if Eli can reach 25. ELY. ELY is in a nice uptrend. And finally got a bounce on the weekly chart, which is what I was looking for, above major moving averages. So between now and February, looking for a move above 22 and then a move to 25. So we'll see how that pans out over the next couple months. It's Eli. Teva bought 12 strike call options of Teva. Don't expire until June 18th, 2021. Into this trade on November the 6th, paying $60 a contract. First target goal is to see if Teva can reach 14 before June gets here. And Teva now, we are well above $9 already. So this one too is starting to see some profits already. So looking at our weekly chart of Teva, this one is just getting started. Looks like TTM squeeze is starting to show the momentum to the downside dying out and the momentum to the upside picking up. Full stochastics just raising above the oversold level in full stochastics. Percentage is pointing higher, CCI is pointing higher. This thing shows that it's just getting started. So the next couple of months could probably be a very, very good time for Teva. And my other darling is Ford. I bought the non-strike calls for Ford. I bought the ones for June expiration, and I bought the ones for March. Looking for Ford to possibly reach $10 prior to both expirations. $76 for the contract that expire in June and $60 for the ones that expire in March. Where's Ford now? Ford 2 in a nice uptrend. And if Ford could find a way to break above or close above the 200-day moving average on the weekly, this thing could be rising for a long time. So I'm looking for those contracts to be extremely profitable. They are already in the money now. But again, when you're playing with house money and you got plenty of time to expiration, let the winners run. IVR bought the 3 strike call options, and IVR doesn't expire until April the 16th. And this trade on November the 9th, paying $40 a contract. First target goal is if IVR can reach 550 before April gets here. So IVR now. This one too, very good setup on the weekly. Trading above the 90 MA, still has the overhead resistance at the 50 MA. So looking for a move up towards the 50 MA prior to expiration. Then if we get a nice move above there, it would be a great move if we can get to the 200-day moving average on a weekly. So that is that could be huge if we can get to that level before expiration. Looking at the daily chart, nice uptrend that's just taking place slowly but surely. Look at a nice move. Slowly but surely, just moving above major moving averages, hovering above the 50-day and the 90 MA now. And the next level is to see price action get to that 200-day moving average on a daily, which would take price action up to about $5. So there's plenty of time left for that to happen. And it's in a nice uptrend. So continue to let that run. Let the winners run. VLY. The non-strike call option on VLY doesn't expire till December the 18th. Now this one, I'm going to be watching this one carefully since it's approaching expiration, and I'll be looking to close this one out very soon. I'm trying to see, make sure I didn't already do so. Made a lot of changes over the past 2 weeks, so some positions I end up closing and don't realize it until the last minute. But I think I still have VLY. So, all right. So this one doesn't expire until November 18th. Entered this trade on November the 10th. Paying $55 for the contract. First our goal is see if we can reach $10. So where's VLY now? Voila, at 950. So still with a couple weeks left. Still below 10, but just starting to become profitable already. And we are at its 200-day moving average on the weekly. So what the hope is that over the next 2 weeks, we get that big push above the 200-day moving average, which will make that one extremely profitable as well. All right, GLUU ended up buying the non-strike calls. Doesn't expire till January the 15th. Into this trade on November the 13th, paying $70 a contract. First our goal is to see if GLUU can get to $10. This one too, also already in the money, even before we reach $10, but nicely in the money now. But there's much more room to run looking at the technicals. So we're right back at the just above the 50% Fibonacci retracement level, right back at an area of resistance. So we could see some type of consolidation here where we at. But looking at the TTM squeeze, full stochastics, looks like this thing just wants to push right through this area of resistance. So a nice move above $10 will put this thing well in the money and make it very profitable. Look at the monthly chart. Look at that big green candle for November. That is extremely bullish. Full stochastics just starting to show a bullish crossover. So like the end of the year, beginning of the year for this one could be very, very profitable. Looking at that monthly chart. So that's glue. SABR is another one that shows some crazy unusual option activity on this past week. So I ended up buying the 1250 strike calls. Don't expire to January. And this trade on November the 24th, paying $86 a contract. Looking to see if Sabre can get above 13. And let's take a look at SABR. SABR. So this one, man, these trends have been extremely strong on a lot of these stocks. Hope people have been paying attention to some of these trends that have been setting up. So this one is a nice uptrend, trending above its 200-day moving average finally on a daily. So what's next to tackle? The weekly chart is next to tackle. Looking at the weekly chart, finally got its first push above the 50-day moving average and actually closed above it. That is a huge bullish signal. So what's next? It would be my guess that Sabre wants to get to its 200-day moving average on the weekly chart. That would take it to $17. So it has between now and January to do that, and I think there's a huge possibility that it's possible. This position, I think it's already in the money, very close to it. But man, oh man, there was a lot of option activity in this one on this past week that was spotted. So it looks like December, January, and April contracts were being traded. Let's do this one like this. So the January contracts are being traded. They were picking up the 12 and a half strike calls and the 15 strike calls for January. So I'm looking for Sabre to show a nice strong move or a good chance to shoot towards that 50-day, I'm sorry, that 200-day moving average on a weekly chart between now and January. So we'll see how that pans out. CSIQ was another one that showed some unusual option activity on this past week. So I ended up buying the 55 straight call options that don't expire to January into this trade on November the 25th, paying $100 for the contract. First target goal is see if we can reach 60 bucks. Taking a look at CSIQ. This one too, nice strong uptrend. These uptrending charts have been popping up all over the place. So this one traded down to its 200-day, I'm sorry, to its 50-day moving average, found support and bounced right off, just like a trampoline. That's the daily chart. Weekly chart shows a nice strong uptrend. Showed a consolidation pattern. I'm just going to highlight that. So this thing continued in an uptrend, but then it started to consolidate between September and November. Look at that tight consolidation right there. Tight consolidation right there. And then we got a big green candle on last week. I think it's ready to break out of this box to the upside. And if you look at that, if you look at it carefully, it's sort of like a bull flag on a weekly chart. That is extremely bullish. And so where was the options market focusing on? So they were focusing on the December expirations, but I gave myself much more time than that. So the December expirations, 3,600 contracts traded versus 15 open interests. The 50 strike contracts. That is extremely bullish. So there's some big bettors on this one. But I gave myself a little bit more time and jumped in the January expirations. They were also heavily traded as well. So that is CSIQ. And folks, I think that is the last of the Mohicans in my portfolio. Listen, folks, November has been a strong month for some reason for stocks. And with it's like I told people before, the market doesn't like uncertainty. As we went through November, we started to get some clarity with the election. We got these vaccines that's starting to come out, which means the stock market is forward looking. So granted, there's a lot of cases that are breaking out now, but the stock market is already seeing so many different companies that's coming up with, these high effectiveness vaccines. So they are speculating that well into 2021, whether it be the summer or into next year, that there is light at the end of the tunnel. So the market sees that as a positive. So the markets move on that news ahead of time. So with that, showing some positive action, that uncertainty is out the way. Our elections, with the presidential election, starting to get some cooperation with the current administration and the incoming administration. That uncertainty is out the way. So there's a lot of positive things that our market is looking at, even though we're in the middle of a pandemic. So end of this year, I'm looking for some great action to continue well into the middle of next year. So right now, you see a lot of good setups because that's all the market is looking at is forward looking and looking at uncertainties finally starting to clear the pathway for the stocks to ease its worries. So that's why a lot of these setups starting to pop up, and they can be huge. They can be huge money makers, as you've seen with Riot, Fossil Soul last week, and many other positions that's been extremely profitable. I mean, I haven't seen profits like this in probably over a decade. So there's a lot of stuff out there to choose from, folks. All right, with that said, I am done. Is there anything anybody else want to look at particularly before I close this session out? Speak now, forever hold your peace. Questions, comments. I hope you guys enjoy your weekend. Um, you're welcome, Scott, anytime. Enjoy your weekend, folks. Just be ready for, some more consolidation. But overall, the market is trending higher and it's leaving a lot of folks in the dust. So don't be one of those left in the dust because of fear. Got to jump sometime, somewhere. And if you haven't learned how to trade options, I would urge you to, because it can be a way to jump out there, but limit your risk and you know, put the odds in your favor. Thank you, sir, ma'am. Have a good day. Enjoy the rest of your guys' weekend, and I will see you guys on the other side next week. Enjoy, folks.